Something. Okay. Everyone, Adam Bergman here. Sorry about the delay. Had some technical difficulties to get on. I'm actually in our South Dakota office, so hope you guys can hear me. Appreciate you guys staying with me. Happy holidays. Wanted to talk about the Backdoor Roth IRA. It's dead. Is the mega Backdoor Roth 401k dead as well? And looks that way. It's possible. The Build Back Better Act, which I've talked about quite a bit in the last few months, the most recent version that's now in the Senate does not include, thankfully, and this is for Evelyn. So actually, before I get into the mega backdoor and the backdoor Roth, I spoke to Evelyn, who's a client, lovely lady, and she mentioned she had an accountant who told her that the provisions related to accredited investors and 10% owners were still in the bill. So this is for you, Evelyn. They are not in the bill. You are able to do private placement investments. The 10% threshold for investments is not in the bill. It never made it into the Build Back Better bill. It was knocked out after it was passed through the Ways and Means Committee. Okay, so just to be sure and clear, you are able to use your IRA to buy or invest in private placements, as well as any entity you own 10% or more. Those provisions are not in the bill. So now let's talk about the backdoor Roth. So just to start, what is a backdoor Roth? A backdoor Roth IRA is a strategy that has been used since 2010. Why since 2010? Well, before 2010, in 2009, for example, if you had more than $100,000 in a IRA, if you had more than $100,000 of income, I should say, excuse me, you were not able to do a Roth conversion. Hard to believe, but yeah, that was 2009. I remember that. And it was actually pretty confusing because the problem was you didn't know really what your adjusted gross income was going to be, right? Let's say you thought you were going to be over, but then you had a bunch of deductions that your accountant kind of found for you, and now you're under the $100,000. You missed the opportunity to do a conversion if the year passed. So it was kind of it was a super difficult threshold. People were upset about it. So what happened in 2009? Financial crisis occurred. Government needed money, right? Businesses, individuals, income dropped, business income dropped, no tax when you lose money. So they said, hey, well, guess what? We could increase our tax collection by doing and encouraging people to do conversions. And we really want to encourage people to do conversions. So we're actually going to let them pay tax over 2 years, 2010 and 2011. So the interesting part is for the last 10 years, you've been able to do conversions without any income limitations. So if you made $1 million, $500,000, $20 million, you're able to do a Roth conversion. Whereas in 2009, if you had more than $100,000, you were not able to do a Roth conversion. So how quickly we've forgotten what the rules were pre-2010. The backdoor Roth IRA was born in 2010. Why? Because there's no income limitations. So anyone that makes more than $208,000 in 2021 cannot do a Roth IRA. But because there's no income limitations for conversions, you can do what's called a backdoor Roth IRA, where you simply make an after-tax IRA contribution, which is a contribution that you do not get a deduction for. So it's after tax. The good news is you can then convert it to Roth. No tax, right? You're going after tax to Roth. There's no deduction, but the conversion is tax-free. And then once the money's in Roth, once the Roth's been open 5 years and you're over the age of 59 and a half, it's all tax-free, right? So that was the big win. And people have been doing it for the last 10 years. I've done it almost every year. And it's been a nice way for me to put away a little bit more money into my Roth IRA for my family. Now, one other thing to keep in mind, and again, time's running out, right? It looks like the Build Back Better Act will get passed probably in 21, but if not in 2022, and we'll talk about what that means, but more likely than not, it's going to get passed this year. And it seems that the backdoor Roth IRA may be killed. Unfortunately, we'll talk about why they want to do it and the reason behind it. But one thing to note is if you do a backdoor Roth IRA this year, there's something called the Pro-Rata Formula. That means you have to take into account all your other pre-tax IRAs when calculating how much of that backdoor Roth IRA will be deemed Roth. So I've used this example in past podcasts and videos, but I'll do it again. It's easy to understand. Assuming you had a $5,000 traditional IRA pre-tax in 2015, just sitting there, just say it's in cash. And this year, 2021, December 15th, you want to do a backdoor Roth IRA of $5,000. So you open an account at IRA Financial, make an after-tax traditional contribution of $5,000, and then decide to just do a immediate conversion. You don't have to actually wait. You can do it the next day. You don't have to wait a year or anything like that. So you immediately convert it to Roth. The Pro-Rata Formula says no. All $5,000 cannot be deemed Roth. What you need to do is add all your IRAs together. So you have that IRA from 2015 and you have that IRA today. Add them together, $10,000 based off the example. And then since you're contributing $5,000, 50%, 5 out of 10, can be converted to Roth. So out of the $5,000, 50% of that, or $2,500 would be converted to Roth. Now, if you don't have any other pre-tax IRAs or you have a pre-tax 401k, that's cool. You don't have to worry about the pro-rata formula. It's only if you have other pre-tax IRAs. So just something to keep in mind. So what's going on? Why is this provision in there? Right? They like Roth IRAs. We talked about this. What's going on? The problem is this. Senator Wyden, who chairs the Senate Finance Committee, has had an issue with Roth IRAs probably for 10 plus years. He actually proposed the first cap on Roth IRAs back in 2016 at a $5 million clip. He's been obsessed with Roth IRAs. We know what happened. ProPublica, there was a leakage of tax information for Peter Thiel, where he was able to turn a few $1,000s into several $1 billion. And that got Senator Wyden's blood boiling. And that's when all hell broke loose. And he said, okay, we want to stop Roths. So what he did is initially said, okay, how are we going to stop Roths? Well, we're going to put a cap. So what he ended up doing, and this is actually a provision that's in the bill, is there's now a $10 million cap on all retirement accounts. IRAs, Roth IRAs, 401ks, not just Roths, right? His initial proposal was a cap of $5 million on Roth. Now it's a cap of $10 million on all retirement accounts. Good news, that's not kicking in till 2028. So you got time if you're in that bucket. Also good news is if you have a Roth, you're not going to be forced to take a taxable distribution. Because it's deemed a forced distribution, you're going to be able to take that money out tax-free, even if you're under 59.5. The previous version was super aggressive and disruptive because it was going to force you, if you had a Roth and you were under 59.5, to take a forced taxable distribution, even though you didn't have to, but for this provision. So the new rule kicks in 28 taxable year, and if you have over 10 million, even if you're under 59, if you have a Roth, you can pull it out tax-free. Obviously, if you have a pre-tax IRA, you pull it out subject to tax, no 10% penalty. That's the first provision that's still in there. Again, the accredited investor, Evelyn, and the 10% threshold is out. So don't worry about that. Those were kicked to the curb. You're good. You can still do private placements. 10 million cap is there. Evelyn, I hope you get to 10 million in a couple of years. So that's something to be aware of. Number two, Roth conversions. There is going to be an income limitation that starts in 2031, not today, not 2021, 2031. If you have income over 400 or 450,000, if you're married, filed jointly, and that's going to be adjusted for inflation in 10 years, you may not be able to do Roths. That's going to bring in that whole issue I talked about pre-2010, where you're not going to know your income, right? Not everyone knows their income as a 1231. There's all kinds of deductions, especially if you have a small business. You don't have, or you're not privy, especially at the end of the year, to what your year end is going to be. So it could cause issues where some people feel that they may have income over that threshold, and it turns out their adjusted gross income will be less because of accelerated depreciation or certain charitable contributions or certain other deductions that they weren't aware of. So it's going to hurt people's ability to plan and do conversions. I'm against an income limitation for Roth. I don't understand why it's there. It makes no sense. Even though it was the law pre-2010, we've been dealing with no income limitations for Roth for the last 10 years, and hasn't been issues. Senator Wyden does think there's abuse, and I've said this many, many times on many, many videos and podcasts. The numbers don't bear it out, right? There's less than 500 Americans that have more than 25 million in a retirement account, not just a Roth, in an IRA, 401k, defined benefit plan, Roth, SEP, simple. Not a lot of people. We got 360 million people in this country, 500 people. He's worried about creating legislation for 500 people. Less than 30,000 people have more than $5 million in a retirement account. Again, you're out of 350 million plus Americans. Not a big issue. Putting 6,000 or 7,000 bucks and doing a backdoor Roth or doing a conversion, is that going to create abuse? So let's take the backdoor and the conversion separately. Okay, backdoor Roth IRA, again, the max is $6,000 or $7,000. Yes, Peter Thiel did turn a couple thousand into a couple billion, but he's literally one person that's ever done that. You and me, we ain't doing that. Even if we're buying Bitcoin or the next Dogecoin or Shiba or Polygon or the next great crypto or hit it big on a pre-IPO or a real estate deal, we'll maybe make 5 times our money, 10 times, 15 times our money. We're not turning $6,000 into 65 million or 200 million. It's gibberish. It's not going to happen. So to dictate policy and hurt everyday Americans. Again, the threshold for the backdoor Roth is 208 this year. It's 214 next year. I talked about this a few weeks ago on a video. You make 210,000 bucks, you're doing well. Okay, you're doing great. You're not struggling, but you're not super wealthy. You're not Warren Buffett. You're not Peter Thiel. You're not Elon Musk. You're still dealing with all the problems that every American has to deal with, like paying bills and dealing with medical costs and saving for college for your kids and all that other fun stuff, right? 210 grand, you pay 25% tax, you get your mortgage, your credit card bill, savings, all this stuff. You're left with a little bit of money in your pocket. You're not living in a chateau, taking a private plane, private jet, wherever you want to go. So to basically tell people that, no, we're not going to let you do a backdoor Roth and put in an extra 6 or 7 grand seems harsh. And it's not going to generate revenue, right? Because it's after tax to Roth. So IRS can't argue it's going to create revenue. Senator Wyden can't make that argument either. It's not going to really stop people from being Peter Thiels because you and I don't have that capacity to turn 6,000 into 600 million. It's just not going to happen. If it was so easy, there'd be more than 500 people in the whole country with 25 million in a retirement account, right? With time value of money, your money doubles every 8 years if you can get an 8% rate of return. So someone who starts saving at an early age, you can expect them to have millions of dollars when they retire. That's why in 8 years, and this is why the number, Senator Wyden used it kind of unjustly, because he said, look, in the last 10 years, look how many more people have bigger retirement accounts. And it's like, yes, Senator, no kidding. That's called time value of money. That happens to all of us. It's not trickery. It's mathematics. Again, it's not a Democrat versus Republican. This is bipartisan, and that's been the most frustrating part about this Build Back Better Act and the Ways and Means tax proposal is, if you look at the Secure Act, which was passed in 2019, which was probably the most significant retirement legislation in 10 years, it was almost unanimous. Democrats, Republicans all voted for it. That's the way it should be when it comes to retirement accounts, because it's not a Democrat, Republican thing, blue state, red state. The system works for all of us. It's based off math. And to hurt our ability to put away an extra 6 or 7 grand sucks. There's no other way to say it. It's not. I wish I had a more colorful way. It sucks. It's not right. It's going to hurt my ability to save more for my kids. It's going to maybe disincentivize me to save. What it could do is make me put more money in a pre-tax 401k, which will actually reduce taxable revenue for the government. So it's backwards. But Senator Wyden and a few other congressmen and senators are just so fixated on Peter Thiel and these runaway Roths that they've lost track of the importance of incentivizing all of us to save a little bit more. So I'm still hopeful. I pray every night before I go to bed that somehow these provisions will get kicked out. It just doesn't seem like there's a lot of momentum. There's been more and more publicity. There's recent articles in Forbes, Barron's, Investopedia on the backdoor Roth IRA and the mega backdoor 401k, which I'll get to in a minute. But it's not moving the needle with Senator Manchin or Senator Sinema. It's just not something they're focused on. So I'm concerned that it's going to remain. And it's just the way it's going to be. So this is your last chance. You got a couple weeks because the provision does kick in 2022. So it seems that once 2022 rolls around, like you're done. You're not going to be able to do a backdoor Roth IRA for 21 in 2022. in 2022 for 2022. So this could be it. It's the 15th today. You got a few weeks. Do it. If you have income, do it. If you don't have income and you're married, piggyback off a spouse. Do it. It's an extra $6 or $7 grand. Why not? Let it grow tax-free. Hopefully it will get turned around at some point. Different Congress, different Senate. Because again, it's not generating revenue. It's not a lot of money. $6 or $7 grand. Like, let's be honest. Come on, it's not going to move the needle for Elon Musk to put $6 grand in a backdoor Roth. Who does this stuff? We do, right? Hardworking Americans that just want to put away a little bit more for their families. Like, it's ridiculous. And as a tax lawyer, it really bothers me because you're de-incentivizing people to save. Yes, I know the rule is going back to the way it was pre-2010, but I kind of think it worked the last 10 years, and it got people excited about saving, and getting more people in a Roth, more people saving is a good thing. The Mega Backdoor Roth 401k is a great solution, and this is really too bad. It's basically a way to put $58,000 or $64,500 if you're over 50, dollar for dollar, into a Roth 401k or a Roth IRA. Now, generally, and I mentioned this, I'll do it quickly, it applies to 401ks, but in most cases, only a solo 401k could utilize it because of ERISA testing, also known as ACP, ADP testing, but primarily ACP testing. I mentioned this. I actually spoke to a client who's works for the United Auto Worker Union, and he actually tried to do a mega backdoor, and he did it. He made the contribution, but it wasn't accepted, and they actually returned the money to him because it failed the ACP test. So even though a bunch of employers, even Fortune 500 companies offer it, more often than not, it's not able to be done because of the failure of a top-heavy, meaning too many highly comps are doing it, not enough rank and file, and the plan goes top-heavy, and it won't work. But it works if you're self-employed, because with a solo 401k, you're not subject to ERISA, and you're able to do it for yourself. There's no top-heavy ERISA testing because it's just you, right? So with a solo K, if you have a provision, like IRA Financial plan has it, where you can put away $58K and then convert it to Roth in the plan, or go to a Roth IRA immediately without a triggering event, it's a great way to put away $58, $64.5 dollar for dollar, right? So if you made, let's say, 75 grand and you're under 50 or even over 50, you probably can dump most of it into this mega backdoor Roth 401k. You do have to take away Social Security and FICA, but that net number, it's eligible for contribution. So really cool stuff. And I've had a bunch of clients utilize it over the years. There's no tax deduction, right? It's after tax to Roth. But if you're a Roth lover, it's a great way to put money in a Roth. That looks like it's also going to go bye-bye, and it's in the same provision as the backdoor Roth IRA. Same attitude, same intent, stop Roths, right? Senator Wyden and his team want to stop Roths, whatever way they can. They couldn't get the private placement in, they couldn't get the 10% ownership, so they're saying, okay, let's carve at it differently. We'll get away the backdoor Roth IRA, limit it that way. We'll get rid of the mega backdoor, limit the flow into Roths. Stop conversions in 10 years. Why aren't they stopping conversions today? Cash. They need it. They need the money they're claiming it will generate over the next 10 years to pay for the Build Back Better Act, which is having a tough time now because of the recent inflation numbers, where Senator Manchin of West Virginia said, hey, these numbers aren't great. Looks like we're spending a lot of money. It may be overkill. So obviously the president and his team are pushing back and say, no, it's going to pay for itself. It won't trigger inflation. It's going to run over a bunch of years. We'll see how it goes. I do think it's going to get passed for whatever it's worth. I think the Democrats have to. They have to get it passed because next year is midterms, and they need to have something in their hand to basically show what they've done from a campaign standpoint. So it's going to get passed. Again, I pray every night that these provisions won't make it in. If you are as disappointed in them as I am, feel free to reach out to your member of Congress or senator. It works. It worked. We did it for the credit investor and the 10% ownership provision, and we were successful enough to get those provisions knocked out. And it wasn't just me or our industry. It was all you. Everyone listening now, everyone watching now, everyone that's reading my books or blogs or watching my videos, all you guys made the difference. So you can do it again. It's tough, but We have an uphill battle because it's a 2,600 page piece of legislation. This is one provision that's just not getting a lot of attention. Maybe because most people don't understand it, but this is the last year. So again, if you're watching this today or before January 1, set up a solo K with IRA Financial. We're actually giving $200 cash back if you set one up, and you'll be able to do the mega backdoor. If you want to do a backdoor Roth IRA, do it at IRA Financial or just do it anywhere. TD Ameritrade, Schwab, doesn't matter. Just it's your last chance. $6 or $7 grand. Again, only if you make more than 208. If you make less than 208, you potentially can do the Roth IRA, so you don't need to do backdoor. Next year, that number is going to 214. But if you make more than the 214 next year, and the Build Back Better Act passes with these provisions inside, you're not going to be able to do the backdoor Roth IRA or the mega backdoor. Now, the mega backdoor doesn't have an income limit, but they're just going to stop after tax to Roth conversions. So you're not going to be able to do it. You can still do Roth conversions, right? Some people have got confused. Mega backdoor and mega backdoor Roth 401k, just to be clear, that's when you go after tax to Roth. A conversion is when you go, or taxable conversion is when you go pre-tax to Roth. Pre-tax to Roth conversions can be done for the next 10 years. After tax to Roth cannot be done in 2022 if those provisions remain intact in the final passage of the Build Back Better Act. What else is in there? There's a lot more money going to the IRS, about $80 billion over a number of years. Lucky us. Statute limitations for IRAs will go from 3 to 6 years. Another one, IRAs owners will be deemed disqualified persons. Other than that, the big stuff, I think, is the mega backdoor and the backdoor. Those are the two areas that I'm the most disappointed with. And it's been super frustrating because I've developed relationships with a number of congressmen and congresswomen on both sides of the aisle, as well as some senators over the last 3 months, 2.5 months, I would say. And it doesn't resonate, this stuff. They're like, listen, Adam, you got what you wanted. You got those private placement, the 10% ownership. We agreed those provisions were harmful to American businesses. We're with you. We knocked those out. But these, I don't understand them. It's backdoor Roths, $6 or $7 grand. And it just doesn't seem like it's hitting them the way it should, right? It's not hurting billionaires. This is hurting families that make more than 208 or 214 next year. May never be able to do Roth IRAs. Again, you can still do Roth 401ks if your plan allows for it. You're not going to be able to do after-tax to Roth conversions in a plan, and you won't be able to do a Roth IRA ever again if you make more than that income threshold, which is too bad, right? I mean, adding a little bit more to a Roth is helpful based off the time value of money. That could turn into a couple $100 grand when you're older, not a couple $100 million, a couple $100,000, which to you and me, to hardworking Americans, that's real money that's going to help us live in retirement, have a better life, maybe help our kids buy a home, do some great things for our family. So we become less of a burden on the government, which is the whole point of the private retirement system. And to de-incentivize us and make it more difficult, it's super sad. And they're just so obsessed with Roths for some reason. And the numbers don't bear it out, as I mentioned. If it was so easy for everyone to just have $50 million in a Roth IRA and buy pre-IPO stock, we would have it. The numbers would show this is what it is, but it's not. The reason there's 25,000 people that have more than 5 million and that number is doubled in the last 10 years is not because people are cheating. It's because there's something called time value of money. And you can just Google it and type in Albert Einstein. And he said it's the 8th wonder of the world. It is. Your money doubles every 8 years if you can average 8%. That's why the retirement system is so powerful. Doesn't mean people are up to no good or dealing with trickery or fraud or things like that. It's just that they're saving and being patient and they're trusting the process. And now the government, wants to pull the rug from under us and change the rules and really, I think, harm the future benefits of the retirement system. So that's it. Again, just to recap, this is for Evelyn. Again, I promised Evelyn because she must have contacted my office 100 times in the last few days. The accredited investor and the 10% threshold is not in the bill. What is in the bill? Just to recap. If you have over $10 million in a combined retirement account, starting in 2028, you'll have to take distributions. They will not be taxable if they're Roth, irrespective of age. If they are a pre-tax IRA, they'll be subject to tax, no 10% penalty. And you have to get it to the 10 million. So if you have 15, you're going to have to reduce it to 10. If you have 9, don't worry about it. The Backdoor Roth IRA, Mega Backdoor Roth 401k will be removed. Roth conversion starting in 2031. If you're above an income limitation of 400 or 450,000, if you're married, filed jointly, subject to inflation or adjusted for inflation, will be disallowed. IRS is going to go to $80 billion more in cash. Self-IRAs have a 6-year audit statute of limitations versus 3, and IRA owners are deemed disqualified persons. That's it. That's really the only legislation tackling IRAs that at least are relevant. So that's it. If you have questions, I'll go through a few questions today. But reminder, this is, if you're watching it before January 1, 2022, do a Backdoor Roth IRA. If you make more than 208, this may be your last chance. Do it for you, do it for your spouse. If your kids work, do it for them. Better, a little is better than nothing. And let's hope this gets overturned at some point and reversed back to where it was today, where you can do backdoor Roths and we can all add a little bit more money in our retirement account. Isn't that the point, right? That's the whole point of the system. Why was the Roth created in 1997? It was to give people more incentive to save, and the Roth was a nice little different angle. Now, Senator Wyden says, well, it wasn't an excuse to get rich from your retirement account, but who's stating what rich is? Is 214,000 a year rich? Is it 450,000? Is it 10 million? It's arbitrary numbers to me, and I don't think Senator Wyden should be telling me how much is too much to save for my family. So it's difficult for me. And again, this is not political. I voted Democrat, I voted Republican. This is not a political video at all. It's disappointing. I wish I could talk to Senator Wyden and just say, listen, you got your cap. If that makes you feel better, that you're not going to have any more Peter Thiels. But why are you hurting everyday Americans that want to put a little bit more into their IRA? Why are you doing this? What's the point? We're not going to be Peter Thiels. We're not turning 6,000 into 600 million. We just want to have a little bit more for our families. Is that bad? So I've been reaching out again. I haven't stopped trying. I've been reaching out to all my contacts. Our industry is as well, but it's an uphill battle. We don't have a lot of time. If the Build Back Better bill gets passed this year, I'm not sure these provisions will be removed. If it gets pushed to 2022, then what my sources are telling me and our industry is that the backdoor Roth IRA and Roth 401k will be allowed in 2022. But that's what we're saying, and that's what we're hearing, although I do believe the act will get passed in 21, personally. I just think around Christmas time, they're going to get this done. They got through a lot of the other things. They raised the debt ceiling level. They've gone through a bunch of other things they need to get through. This is the last thing. Biden's pushing for it. The Dems are pushing for it. As long as they can get Manchin on board, they'll do it. Okay, I was hoping to roll my 401k into my Roth. Guess not. Yeah, you could do conversions for the next 10 years. So that's good. Again, just to be clear, you can't go after tax to Roth. If you have a pre-tax Roth 401k, you can go to a Roth 401k. You just pay tax on that amount. If you have an after-tax account, you want to do a mega backdoor, you can still do it for the next 2 weeks. Just probably not in 2022. Okay, stop my after-tax contribution in mid-November, just finishing up the last rollover to the IRA now. Okay, good job, Dan. John, if Senate doesn't approve this bill before the end of the year, can I make a Roth backdoor January 2022? No one knows. Again, my sources, John, are telling me that we'll probably be okay, and they'll probably kick in 2023. They're not going to retroactively stop it. But that's what just our sources. From an industry standpoint, that's what we're hearing. But I truly believe the bill will get passed this year. I think 70% it gets passed. I'd be shocked if it didn't. What is the current limit on a taxable conversion to my Roth for my SEP? There's no limit. There's no income limitation. So if you're Elon Musk, you can do a conversion. There's no income limitation. 10 years, the income limitation will kick in. Before 2010, it was a $100,000 threshold. Government loves conversion. Believe it or not, they love conversions. Why? You're prepaying your tax, right? Actually, from a tax lawyer standpoint, I have a lot of tax lawyer colleagues, and yeah, maybe we're kind of geeky, but we actually talk about this stuff when we get together. And we're like, I have some colleagues that are really against conversions. Why? Because they believe that you should always defer tax. You should never pay it up front. Now, obviously, the exception is, hey, if you're doing a pre-IPO, or if you think your Bitcoin or your investment is going to multiply considerably in the future, and you're going to be able to be patient and wait until you're 59 and a half and the Roth's been open at least 5 years, then yeah, it could make sense. But if your income level is going to be low after you're 59 and a half, then again, the conversion may not make sense, because this way, after 59 and a half, you could just pull out what you need and just pay a little tax on it without paying a lot of money if you're going to be at a low income tax level. But if you feel like you're still going to be working, you're going to be making 6 figures plus up until your 60s, 70s, or 80s, then in the conversion, you can pay the tax. You're confident in your investments. It could make sense. But there is a line of arguments on the flip side from a tax standpoint saying never want to prepay tax. Always defer. Always defer. So there's no right or wrong. Honestly, I always give the Enron example. Like 20 years ago, hard to believe, Enron. But for people that don't remember Enron, Lehman Brothers, Bear Stearns, or other cases today where you pay tax at a high value and now your asset's kind of worthless because the company's bankrupt. And now you pay tax to the government at this value and you have zero left. So that's obviously the worst case scenario. The best case scenario is you do a Roth conversion when you bought Bitcoin at $40 and now it's 48,000. That's the best case. And then everything else is kind of in the middle. Next question. Can you please elaborate on pre-tax versus after-tax conversion? Yes, I will, Mohammed. And I appreciate the question. I'll do it again. So when you set up a traditional IRA, you can do a pre-tax IRA, assuming you're allowed to do the contribution based off income thresholds. Pre-tax means you get a tax deduction. So when you open an IRA, in a lot of cases, it's going to be up to you to determine if it's pre-tax or after-tax. And that means whether you take a deduction on your 1040. A lot of times, the custodian is not going to know your income level, whether you have access to a 401k at work, so it may not even know how you're treating it. Pre-tax, you take a deduction. An after-tax IRA is still an IRA contribution. It's just after-tax, meaning you put in $6,000 or $7,000 if you're over 50, and you're not taking the deduction on your 1040. You never want to do an after-tax without doing the Roth conversion. Why? Because you're in no man's land. You don't get the deduction, and all your earnings on the after-tax are subject to tax, right? So you don't get the benefits of the Roth, which wait 59 and a half and wait 5 years, it's all tax-free. You lose that, and you lose the benefit of the pre-tax IRA because you're not getting the deduction. So you lost all your benefits, and now you have an after-tax account which you have to pay tax on the earnings when you pull out, plus 10% penalty if you're under 59 and a half. So you got the worst of both. That's why you never want to be in the after-tax world. So that's why by eliminating the conversion, they're basically stopping it because no one's ever going to do an after-tax IRA or an after-tax 401k. It's pointless. You either do pre-tax or do Roth. If you do pre-tax, at least get your deduction. Why do you want a deduction? It lowers your taxable income in the current year. Why do you want to do Roth? If you're patient, you wait till you're 59 and a half, Roth's been open at least 5 years, bang, tax-free. So Mohammed, you never want to be in the after-tax world. That's why conversions are pre-tax to Roth or after-tax to Roth. Converting after-tax to Roth, assuming you have no other pre-existing IRAs out there, that's tax-free, right? Because after-tax to Roth. If you go pre-tax to Roth, you're paying tax on the amount you convert. So if you have a pre-tax IRA from last year, $5,000, and you're converting to Roth, and it's in cash, it didn't generate any earnings, you pay tax on the $5,000. If you contributed $5,000 and you bought Bitcoin and now it's worth $10,000, if you can convert to 10, you pay tax on the 10. There's no 10% penalty, there's no withholding tax on the pre-tax to Roth conversion, but you pay a tax. You pay income tax, not capital gains tax, income tax. That's why, Mohammed, you got to think about a few things. Number one, can you pay the tax? Paying tax out of your conversion makes no sense. Stupid. If you can pay the tax because you got extra cash in your pocket or you have losses that will reduce your taxable income, then great. If you can pay the tax, okay, that's one check. Now, your second box you need to check. Are you confident in your investments? If you're not, you're like, I don't really know what I'm doing. I could lose it all, or I could make a little bit of money. Maybe not. But if you feel like, hey, this could be a big, big, big win for me, the next big, Bitcoin or the next big investment, then the upside may be worth it. Check the box. 3, what's my income level when I retire? If I'm going to be at a high income level, conversions could make more sense, because when I pull money out, having it be tax-free has more benefit than if you're retired, living on Social Security, and have income of $40,000. Even if you pull 10 or 15 grand out, your tax rate will be super low anyways. So doing that conversion may not make sense. So great question, Mohammed. I wish I can give you the answer whether you should convert or not, but based off your question, the difference between pre-tax to Roth is it's taxable, and after tax to Roth is not. Okay, Kara, what about future tax rate? Think they will go up next year? Well, actually, the Build Back Better Act did not increase tax rates. The proposed House and Ways and Means Committee tax bill, which was released September 15th, did have increased tax rates up to 39% and then increased corporate tax rate. That did not make it into the final bill. So no, tax rates will not go up next year. Will they go up in the future? Oh, who knows? I mean, we're dealing with inflation. It depends, honestly, without getting political, it generally depends who's in office. Republicans generally do not want to raise your income tax rate, although they may raise it on the highest level. And Democrats generally will raise it at the highest level, but will keep the more moderate tax rates lower. So it all depends. But I do believe in the next 10 years, if you're in the highest tax bracket, you should expect tax rates to go up. Okay, Mr. T. So if we already have a backdoor Roth with IRA Financial, it gets signed in, what is our next move? Nothing. I mean, you're in. You're good. You're good. You just can't do, Mr. T, you just can't do it for next year, right? If you put in 6 or 12 or whatever you put in over the last 10 or so years, great. That's it. It's stuck. So you can keep investing it and growing it. That's cool. But you're not going to be able to add anything. Roy, what's going on, Roy? Don't you think inflation will put the banks, the brakes on the new bill? It could. I just think and this is the way it was explained to me by some Republican congressman, saying, hey, midterms are next year. When the Democrats, when they go and talk to their constituents, they need to hold something in their hand and say, hey, I'm running. This is what I've done. Look at this great bill we did. Look at all this stuff we did. Vote for me again. That is super helpful versus, in the last year and a half, nothing's happened. We didn't pass this. We didn't pass that. So from an elections campaign standpoint, I think having the Build Back Better Act is going to be crucial. I think the Democrats are nervous. They saw what happened in Virginia in the governor race, saw what happened almost in New Jersey. I think they're worried. I think there's a serious threat to Congress flipping to the Republicans. And I think they're super worried. And I've spoken to some moderate Dems who are worried. So we'll see. It's going to be interesting what happens. Will progressives do better than the moderate Democrats? But I think having the Build Back Better Act passed and in their hand when they're campaigning is going to be a big help for them. Jeff, so the current bill will allow us to contribute to our SEP pre-tax on 1/3/2022 and convert to a Roth. Yeah, Jeff, so Roth conversions, yes, up until 2031 based off income limitations. So until 2031, you can go pre-tax IRA, pre-tax 401k, pre-tax SEP to a 401k, even if you make $100 million a year. No problem. After 2031, there'll be an income limitation. I don't know if that will ever stick around, to be honest. I don't think that ever will be law, because I think whoever's in office understands the value of conversions from a tax revenue standpoint. So I think that will always get kicked down the curb. Tom, paying income tax means you simply report on line 1 as income on your tax return. Right, it's just added to your income. So if you're a lawyer, Tom, you make 100 grand being a lawyer, you do a $50,000 conversion, your income's 150. Sir, how to avoid pro-rata rule with Roth conversions? What if I have a SEP traditional and defined contribution plan? So how do you get around the pro-rata formula? What's the pro-rata formula again? You have a $5,000 IRA from past years, and now you want to do a backdoor Roth IRA. You have to add them together, and then the pro-rata amount can be converted. You got an easy solution, Sir Norman. Just roll your SEP into a 401k. If you have a defined contribution plan, you should be allowed to roll pre-tax IRA funds into it. So once you roll the IRA into the 401k, you now no longer have any IRAs left. So now you can do a backdoor Roth IRA without the pro-rata formula kicking in. So that's your solution, Sir Norman. That's it. I don't see any more questions. So if no one has any more questions, I think I'm going to end for today. But if you do have more questions, you can always email info@IRA Financial. Just say, ask Adam. Adam Live will come to me. You can leave us questions or comments on YouTube. Subscribe to this channel if you haven't already. I do an Adam Live each week. I drop close to 4 to 5 videos, 3 podcasts. So if you are sitting around bored or can't sleep and you like self-directed retirement stuff, like this is a great place. I'll probably keep you. Actually, I'll probably put you to sleep. So if you can't sleep, this is a great place. Or if you're just interested in hearing some good stuff on retirement accounts. But again, I really appreciate all the support. You guys are awesome. And if you have ideas for future Adam Lives, let me know. Next week, I'll do something probably end of year, like some capital gains, tax planning stuff, because there's still some time left. If you want to shelter, you have the ability to shelter up to $3,000 of capital losses against ordinary income. So that's something we all should be doing. There's no wash sale rules yet for crypto. That is potentially in the Build Back Better Act, that next year you won't be able to, if you sell Bitcoin at a loss or Ethereum at a loss for 30 days, you won't be able to buy it back if you want to absorb that loss. So there's some interesting things that you can do end of the year to help reduce your taxable income, put you in a better spot. Other than that, I want to wish everyone happy holidays. Hope you get to spend some time with your family and you're healthy. And that's it. Have a great rest of your day. Thanks for spending some time with me, and see everyone again soon.